Hello everyone, welcome to Insurance Business TV and our latest editorial panel focusing on the workers' compensation space. And in this edition, we're going to look at costs, state level changes, innovations, claims, and more. And to do that, we welcome a genuine expert in the field. That man is Andy Shelton, Washington State Workers' Compensation Practice Leader, Property and Casualty Broker at Brown & Brown. Andy, welcome to Insurance Business TV.
Yeah, thanks for having me.
So, Andy, we are, of course, seeing wage growth, medical inflation, increasing indemnity, claim severity, all pushing workers' compensation premiums higher, despite declining claim frequency, of course. So how are brokers and insurers navigating these dual dynamics of cost and stability in 2025?
Yeah, I think, especially as you talk about wage growth and severity, part of the system is built so that those two things work together, right? So as wages go up, the premium base that employers pay on goes up with it. So while rates may be flat or decreasing, the system takes in more premium as those wages go up, but that also drives up benefit costs on the after a claim, right? Because those are based on pre-injury earnings. So those two things kind of move together and take care of each other a little bit. When you think about kind of the pressure that puts on the system, but medical inflation, obviously is just direct cost built into the claims. So that's something that does put some pressure on things. But really what we're seeing right now is that all in all, rates obviously are stable. We've seen rates coming down in most cases in most states. And most of that severity increase that we see on the indemnity side of claims is really, again, just coming from that wage inflation and on the medical side too. I mean, there's just an aspect here of this is just medical inflation working its way into the system. So what we've seen is it remains a really competitive market. Underwriters, I think, are doing a lot of different things compared to maybe 5 or 10 years ago that they didn't used to do in terms of how they underwrite, the types of things that they look at. But for the most part, in most cases, it's still really competitive out there. So for brokers, I think the big question is, making sure that not necessarily that you're out remarketing that business, but that, you're staying in line with what the market's doing and taking advantage of, all the things a good carrier partner will give you when you're making those placements as far as, supportive services, loss control and those kinds of things. But that, really not being too comfortable and making sure that, you're not kind of falling behind the market, I guess, that in that sense, as rates have been soft. So that's kind of what we're seeing from our vantage point, which is really that the system is kind of humming along the way it's supposed to for the most part. And again, I think that severity number, when you index it back to wages, isn't as concerning as it might look, otherwise, because again, you kind of take that in at the front side of the premium. So we're seeing a pretty stable and healthy and competitive market from our end, and just making sure that, anytime things are soft this way, you don't get too comfortable where you are, and make sure that, or, the partner you're with is kind of keep it pace with what the rest of the market's doing.
Great, of course, to hear you describe it as a healthy marketplace, but we are, of course, seeing a lot of legislative updates as well, like expanding compensability for mental health conditions, informing claimants of the legal rights and treatments related to worker classification as well, all of which are sort of reshaping the landscape. So how should brokers help their clients to anticipate and indeed comply with these evolving state level changes?
Yeah, and the mental health one's the one that's the most interesting to me, and partly because my home state of Washington is ahead of the curve on this a little bit, and it's been interesting to see it kind of play out here in Washington as far as how some of those PTSD and other types of mental health presumption laws play in. But it's a complicated subject, and as far as things like PTSD, those are mostly limited to first responders. So in the scope of most of the bills we're seeing introduced across the country, when you start talking about things like post-traumatic stress disorder, very few of those are proposing an expansion of coverage. Or if they do, they tend to be more rebuttable presumptions. But those are definitely the outliers. So most of that is really limited to, your firefighters, paramedics, police officers, those kinds of categories. But, as you look at mental health more broadly, very obvious. And especially if you operate in the claim space at all, in your day to day, so much of what we see in terms of actual claim outcomes and recovery times and the ultimate cost of those claims, you might be dealing with a shoulder injury or a knee injury or something like that, but so much of how long it takes that worker to feel like they're capable of going back to doing the things they used to do, how well they kind of cope and deal with pain. A lot of that has very little to do with the physical injury they sustained and a lot to do with, essentially their mental health after that injury. And so I think, legislators and insurers and other market participants are looking for ways to move that along because it's a notable issue in terms of improving outcomes. But anytime you start, obviously expanding benefits, there's potentially kind of a double-edged sword there. So, and probably this isn't strictly mental health, but a good example of that might be something like these interdisciplinary, pain management programs and things like that. They call them FRPs in California, but, and the data out of those is pretty discouraging. There's a recent report out of California that, they really just cost a lot, don't necessarily lead to the better outcomes, but everyone's looking for things like that. And then, and the medical guidance is attempting to do the same thing. So, having some aspect of limited coverage for those mental health conditions, I think when done well, can really help improve outcomes. But, anytime you start really looking at, we're just going to take these things on or treat them as a normal part of the claim, there's a real potential there for cost to increase. And most of that is just, if you sort of expand the basis for that temporary disability, it's likely that will last longer, right? If it's not just the condition of that joint or what we're talking about as far as physical injury, but, your tolerance for pain. Because again, a lot of, especially with pain, it's kind of non-objective issues. A lot of that it's more to do with someone who's, maybe experiencing some depressions and things like that, as a result of being separated from the workforce, not being able to do what they, operate the way they normally operate, function the way they normally function. And, that has a real direct impact on their claim, which is something I think really employers can think about a lot as well. And so looking at ways to keep people connected to work, being really creative and aggressive about your return to work programs. If you keep those people, even if they're not able to do their normal productive tasks, there's a lot of value in keeping them connected to the workplace, connected to their coworkers. And we see that the shorter amount of time they spend away from work, you have a much lower, occurrence of those kind of issues and mental health diagnoses and those things that tend to drag claim out. So it's hard to say one for one, if I bring someone back within this window of time, then I'm going to see X amount in savings, because on a single claim basis, it's really hard. That's so specific to the person, an injured worker. But certainly if you look at a body of claims, and not even a particularly large one, you'll notice very different outcomes, lower rates of disability and all that kind of stuff if you're doing a good job keeping connected to work. So that's certainly part of the puzzle, but it's probably a good thing that we're thinking more about it. This is a 100+ year-old work comp system we work in here, and those types of things obviously weren't really played it when a lot of these laws were written. So yeah, it's been interesting to see, but and then specific to the first responders too, I think, so much of that comes down to how those laws are being written and what that language being proposed is. And I think in a state like Washington, which has extremely expansive definitions around what constitutes occupational disease, what the criteria for objective findings to certify time off of work and everything, that doesn't necessarily exist everywhere else. So I don't know that we're necessarily a good test case for the rest of the country. But it's been a real challenge here. Significant essentially cost overruns here that this state fund wasn't really built to handle it. And it's been a challenge there. So, but again, I think if you look at that in some of these other states where these things would be proposed, there's probably some wider context just in how the claims are handled in general that would not necessarily lead to the exact same kind of outcome. But that's a big deal for sure. But yeah, as we look at, some of these other laws too, a lot of them, informing workers of their legal rights, I think, may have an impact. I don't know that that's necessarily a bad thing either. I don't think it is. I think that there's already been in the past, rules in place around posts. A lot of those come down to things you're supposed to post in your workplace, things like that. Which, is anybody reading those? Maybe not. Overpay, I don't know. We go get our coffee or whatever it might be, and don't pay a lot of attention to that stuff as we walk by. But in some states too, there's fairly explicit notice already, and if you look at like kind of initial entry packets or accident forms, that kind of thing. So, I think that's all in all probably a good thing. And the larger issue there is probably if workers see any of that and decide they need legal representation, right? That's obviously a major driver when it comes to cost. But I don't know that I expect anything too seismic to come from that category of those. The worker classification ones are interesting and certainly a hot topic, and it's kind of interesting too, because I think some of that activity is specific to just general independent contractor type of work. And that touches a lot of different industries, but a lot of this is really pointed at how do we deal with the gig economy and how do we deal with those gig workers where, they may work full time driving for a rideshare company or something like that. But that employment relationship doesn't look, or is not categorized as the employment relationship. And I think a lot of state legislatures have looked at that and said, well, when we think of the kind of traditional tests around controlling the work, controlling how the work was done, supervising that work, allowing independence in how to perform it, it doesn't exactly pass the kind of sniff test, I guess, when you look at some of these gig workers sometimes, just because those lines are a little blurred, right? Yes, they can choose to work or not. And when they do bring their own equipment to it, but then you look at how, and what that looks like really when they're on. And it, and I'm not saying it's one or the other. I'm just saying it doesn't look as clearly on one side of the line or the other as a lot of other kind of traditional arrangements have. So I think you see a lot of difference in opinion there politically, depending on which jurisdiction you're looking at in terms of how we want to try and categorize that work. And so that will be interesting. It's one of the things though, I think that it's interesting to watch. I think if you're looking at the market in general, it's interesting. It's not as if, your average business owner watching this TV though, probably are watching this TV programming, really is operating those types of platforms. So, because they tend to be, pretty consolidated with really large companies. So, I don't know, aside from just what's maybe academically interesting to those of us who do this, and then obviously that segment of the economy that is doing that. Obviously, it's very important, and I think it's interesting from the standpoint of what the impact on the market may be if you pull more people in terms of potential injured workers. But your average business watching this probably does not have a whole lot of direct stake in that. But but I think again, all of these things are really interesting. There's a lot of activity out there around medical marijuana and even some other like hallucinogens and things like that out there, both for legalization but also for treatment that pose some interesting challenges too. So I think the takeaway from all of that is it's always evolving. and that's always, I think, been the challenge in workers' compensation, whether you kind of, no matter what lens you look at it from, is that we don't have one system. We have 50 and they all work a little differently and they're all moving and changing at the same time. And that can introduce just a lot of complexity as you do it. So I think as a broker, and this is probably the answer for a lot of these things, right, is you've got a better line of sight on all of this than your average, client probably does. And so the biggest thing you can do is just make sure that none of these things are a surprise, to the extent and understanding what's happening well enough to apply it to that client that's in front of you today. Right. And I think that's a skill that some do better than others. Right. I think we all see this. We all read the articles. We all hear about it. But, being able to kind of draw that line to that matters to this business because, and then be out there and working with them, on what that means is really kind of where the best, kind of best service or best function of a broker can be. So, but it's a lot to keep up on. And especially as you look at larger clients, in multiple states, there's a lot happening there. So having a broker that, is familiar with that, not just in one or a few states, but nationally is a big deal too, if that's kind of what your footprint looks like as an employer. So,
well, of course, you touched a little bit on costs as well, and the NCCI reported a drop in net premiums, continued declines in lost time claim frequency as well. So what strategic adjustments do you think that insurers and brokers should be making to sort of balance profitability with those shifting workforce demographics and indeed claim severity as well?
Yeah. I mean, again, I think a lot of that severity is inflation based and specific to wage inflation. And there is a point where, with the premium base being based on payroll, and then also with for experience rated employers, the split point, which is essentially the portion of the claim which is counted, most directly in their experience rating, also being indexed to medical inflation. The system is designed to do a lot of things to, essentially distribute premium or collect premium where it's needed and kind of sell it for extra. And I think that's why you're seeing net premiums come down, even when you see, a metric like severity going up. So, and inflation's going to have a lot to do with that. And, as you're looking at the economy and what's happening, anything that pushes inflation up is kind of, continue to do that. But I think the system's pretty well positioned for that, at least from a wage inflation standpoint. Medical inflation is going to drive some rate, but those have been fairly moderate. Kind of the most recent data I was looking at out in CCI is, you're seeing kind of physician costs in the single digit percentage increases. So nothing too concerning. But the big thing for insurers, I think, is how they underwrite and what they're looking at and being intelligent. So when you think about profitability for an insurer, looking beyond, class of business, looking beyond, those things, and looking beyond even a particular business's loss history, and really understanding, do they have the right things in place from a preventative standpoint, from, their kind of claim protocols on the back end to mitigate what those losses look like when they do happen. That's where the attention is, because as rates remain soft, and you look at kind of the line as a whole, it looks really good. But if you're out there trying to underwrite individual risks, you've got to really think about, I can't go necessarily just collect at a high premium point. So I really got to underwrite to what the fundamentals of that business are, and if those are healthy or not. And so I think that's more and more the case, and more what we see from the underwriting partners we work with, is that they're probably looking a little closer and scrutinizing things that, again, years ago they may not have scrutinized closely. And they seem to have better ideas. They're using data internally in different ways about what those things are that they care about. Those can differ, from one insurer to another quite a bit. But for businesses, buying the insurance, again, and brokers working with them, helping them understand what those are, right? What does the market care about? What do underwriters want to see? What are they concerned about? So that you can position yourself, to essentially present well, and your broker can take kind of, that best story or best version of that business to market, and they go to place the insurance. But I think, again, it's a little different when you think about it from the perspective of workers' comp and at the whole, which I think really again, just all the signs are pretty good. But that can, isn't necessarily the same when you're looking at a certain risk, right? But there's going to be types of business that are less desirable. There's going to be types of business that really have, again, some of those controls that are almost mandatory, where maybe for another class of business it's not. And so just understanding what those are, both as a broker and as a purchaser, is going to be the biggest thing people can do to be successful as they navigate that.
Just to bring our conversation together as well, how should brokers position themselves then as strategic partners to support client resilience through cost control, regulatory compliance, workforce safety innovation as well, and indeed smart use of data for a future-proof workers' compensation model? How can brokers go about that?
Yeah. And, at a high level, this is probably the same as always, right? If your broker's really doing what they ought to be doing, it's more than transacting a policy once a year, right? And so as you think about all of those things you talked about, helping clients understand them, helping connect them to resources, to address some of those issues, working on that with them throughout the year, working with your carrier partners, because I would say there's a huge amount of resources available for most of these insurance companies, which are just dramatically underutilized. And getting everyone to realize that this is kind of an ongoing project. And to a certain extent, if you're doing all those things right, your renewal might be the least climactic thing that happens all year. If everybody's on the same page and working towards those goals together. I think you mentioned employers' experience data. That's a really key thing as well. Understanding what can I do to influence those costs. And obviously the best claim is a claim that never happens. But once you have one, you have to deal with it. And so understanding, how you can guide your employers to get the right programs in place to help mitigate those costs when they happen or it's going to be key. And some of that might be safety related. Some of the new kind of smart PPE things coming down the line. A lot of that isn't necessarily even prevention based, right? You think about like fall detection systems. That's just more making sure you get to that injured worker sooner, so that they're treated more effectively when they do, suffer an injury that way. That doesn't necessarily prevent anything, but should lead to hopefully better care for that worker and better outcomes on that claim, on through to your return to work, on through to any of those things really work to help people get together. And that gets down to that how you manage those claims. Are you really pushing towards good, proactive, curative treatment in a timely manner? And so that involves everybody. That's your carrier, your TPA, your broker, your employer, all need to be kind of pushing towards those same things. And so as you look at the claims that you've had, understanding which one of those historically has driven more costs, assuming I've had enough, to make smart inferences about that. Understanding which one of those has led to costs in the future, or kind of where that breaks in the claim process. So that if I've got this whole, it can be overwhelming. I've got so many things out there coming at employers. Which one of those is actually going to be a smart use of resources, or should I prioritize maybe above some of the others in getting implemented, because I know that's kind of where the return on investment has been historically, right? And so that can be difficult for employers as well. So you might look at a loss run, you might look at number of claims, you might look at all kinds of different things that you see in trending information. that doesn't necessarily do the math for you on how does $1 in losses translate to, however many dollars of premium, right? Or wages I'm paying while a person's out, or, working some alternate duty, any of those kinds of things, right? And so working with a broker partner who can really kind of help break all those things down in terms of, again, where that bang for your buck is, isn't necessarily obvious for, a non-insurance professional. So that's one of the things your broker should be helping you do. So, yeah. And there's a lot of different ways to do it. But again, I think the key comes down to taking the individual business, individual client you have in front of you, whether that's their experience data, what you know about current loss control programs, any of those things, and being able to kind of say like, hey, these are the ones that really matter. These ones are really going to move the needle for you. And, how we tie those back to what your specific situation is kind of always the key. And again, it's just being a good proactive partner and not just someone who transacts, a policy renewal. It's good.
Yeah. Excellent stuff, Andy. Many, many thanks for your time. No doubt we will meet again in the future. And of course, we hope to meet you again too. So see you next time right here on Insurance Business TV.